Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market analysis, geopolitics, yields, and capital rotations. This video presents a direct informational narration of the source document. So looking at the July 8th market overview, the source details a fairly volatile session for U.S. equities. The Dow was dragged down, while large tech and semiconductors essentially held the line to support a mixed index. Under the hood, the internal market structure was visibly weaker than the headline indices might suggest. Declining stocks actually outnumbered advancing ones. So, while a few large-cap tech names provided support, heavyweights across finance, real estate, and aerospace faced widespread pressure amid a heavy wait-and-see sentiment.
The top-down structure of the analysis covers 6 main areas. We're going to walk through geopolitics and market jitters, the threat of bond yields, semiconductor resilience, NVIDIA's specific role in the market, the bursting space sector bubble, and finally, the capital rotation into Chinese ADRs.
Starting off with Section 1, Geopolitics and Market Jitters. The source notes a very distinct high-frequency reversal intraday. During the morning, tough rhetoric at the NATO summit regarding Iran sparked a quick sell-off, sending the Nasdaq gapping down over 1%. But by noon, that stance softened significantly. The U.S. clarified it wasn't seeking a protracted war or a second front, and almost immediately, that repaired market sentiment as the indices recovered their lost ground. To put that intraday volatility into perspective, the VIX index spiked by a massive 18% at one point, but it only ended up closing up 5%. This clearly demonstrates a pattern of panic, observe, and eventually dismiss. Algorithms are heavily driving these short-lived panics, but actual human capital isn't rushing for the exits, showing the market is growing increasingly numb to this specific kind of geopolitical noise. Moving to Section 2, the bond yield threat. While geopolitical headlines cause intraday noise, the source identifies underlying macroeconomic data as the true driver of market pressure. Specifically, the U.S. 10-year Treasury yield approached 4.6%. The analysis stresses that whenever the yield stays persistently above that critical 4.5% threshold, it creates heavy valuation and deleveraging pressure, particularly biting into high-valuation growth stocks. Looking internationally, there was another pressure point. The South Korean Kospi dropped 13% from its June peak, which officially put it into a technical bear market. This concentrated release of profit-taking actually triggered some early panic that it would spill over into U.S. semiconductors, though we did see a rapid intraday bounce shortly after the U.S. Open. That brings us to Section 3, Semiconductor Resilience. Looking at the technical setups here, the Russell 2000 managed a technical bounce, reclaiming its 50-day moving average. However, the document points out this happened on low volume, indicating it was mostly dip buying rather than a massive influx of new capital. Meanwhile, the Nasdaq 100 is still treating within a descending triangle pattern, meaning downside risks haven't fully cleared. A major bright spot in this space was Broadcom. The stock gapped up, driven by a massive $30 billion multi-year custom chip deal with Apple. Crucially, over 15 billion of these chips will be manufactured in the U.S. The source emphasizes that this deal not only accelerates Apple's push for supply chain localization, but strongly bolsters Broadcom's AI network infrastructure growth for the years ahead. Now for Section 4, NVIDIA's unprecedented market role. The speed of NVIDIA's market cap expansion is just staggering. To illustrate, last August, NVIDIA was sitting $1.37 trillion behind Apple. Fast forward to recent days, and that gap completely collapsed to just $21 billion. The analysis highlights that NVIDIA has structurally transformed into an institutional blood bag, essentially acting as an absolutely crucial provider of liquidity for broader market rebalancing. Adding a timely catalyst right as NVIDIA challenges Apple's valuation, rumors surface that Chinese tech giants like Alibaba, ByteDance, and Tencent received limited approvals for H200 chips. Even though the rumored numbers are relatively small, under 200,000 units, it proves the baseline demand is still incredibly strong. And despite this massive run, the valuation metrics are really interesting. NVIDIA's forward PE is sitting at 18x. Compare that to the broader indices. The S&P 500 is at 20x, and the Nasdaq 100 is at 23x. So NVIDIA is technically cheaper, which helps explain why it continues to attract such strong underlying support from institutional capital. But the source document poses one absolutely critical question regarding this momentum. Will the big four clients, Meta, Google, Microsoft, and Amazon, keep spending billions on AI GPUs?
Their upcoming earnings and future AI capital expenditure guidance will really dictate whether the current AI spend is sustainable.
Shifting to Section 5, the space sector bubble bursts. Moving completely out of semiconductors, the document notes that momentum in the highly speculative aerospace sector has rapidly cooled. We're seeing a massive reset in valuations. For instance, Lunar, ticker LUNR, suffered a dramatic 66% drawdown following management dilution. Peers like Planet Labs are also down 50%, highlighting a highly emotional boom and bust cycle in these space concepts.
Finally, Section 6, capital rotations to Chinese ADRs.
Concluding the analysis, the document points to a sudden and massive geographic rotation of capital. As funds took profits from the global semiconductor pullback we just discussed, that capital was directly rotated out of US and Asian semiconductor holdings and shifted heavily into beaten-down Chinese internet leaders. According to the source, this direct capital rotation resulted in Alibaba surging 11% in a single day.